All right, what's going on? Welcome back to the channel. So as you know, in this channel, we talk about all things money, finance, entrepreneurship, how to get your credit right, how to properly structure your credit report so that you can maximize it and apply and actually get access to high credit limits and big business funding. But when it comes to what we're going to be talking about today, well, I kind of wanted to take a different approach in this video altogether. You see, we're going to be breaking down 5 different credit hacks that people use today in 2021 that, well, they aren't illegal, and the fact that they haven't been banned yet, well, it's only a matter of time, because we know that credit bureaus as well as some credit card issuers are starting to catch up to some of these methods. So watch this video not so much as financial advice, but more so as education of what's going out there in the credit card world, in the credit card space. And if you do find this content useful, consider hitting that subscribe button down below, join the official community, and tap that like button because it does help this content reach a larger audience. So we all know the whole spiel when it comes to pay your credit card bills on time, lower your credit card utilization, and make sure that you don't carry a balance of over 30%, right? We've all heard that to an extent. This is how you build credit. This is how you get up to a 700, 750, even an 800 credit score, right? But the purpose of this video is to give you some different ways and some different tools that some people are using to kind of bypass the traditional way of building credit. Now, the first hack that a lot of people are using to really give a boost to their credit score, it's going to be the 15-3 rule. Now, if you've never heard of the 15-3 rule, here's how this works. You want to find out what your due date is. There's 3 important dates when it comes to your credit card. You have the opening date. That's when the statement opens, when you can start using your card. Pretty much if you pay off your balance in full every month, you'll see that it's at 0. You have your due date. That's when the payment is due for that billing cycle. And then you have your closing statement or your closing day. Your closing day is what closes that statement for that billing cycle. And then that number that's left, so let's say if you haven't paid off your credit card in full, that's the amount that's going to be reported over to the credit bureaus. And then that's how they come up with the credit utilization. So for the purpose of the 15-3 rule, you want to focus on finding out what that due date is. So let's say that the due date is on the 21st. You are going to make a credit card payment 15 days before that due date is. So find out when that is. For the 21st, I'd say it's right around the 6th, give or take, right around the 6th, maybe the 7th. And then you want to make another payment 3 days before the due date. And so what ends up happening is that when this happens, a lot of people say that this kind of tricks the system into a, not so much a double reporting, but in terms of a double, almost like a double anchor for the credit card utilization rather than just making one payment. Even though you'll only see one, it being reported one time on your credit report. So even if you do that and then you pull your credit report, you only see it one time. For some reason, it triggers something in the system and it actually causes for you to receive almost like a double portion when it comes to getting that credit boost. So instead of getting a 20-point jump, you'll see a 30 to a 40-point jump. That's method number 1 and hack number 1 that, well, it's not illegal and it hasn't been banned, at least not as of yet. Now, method number 2 is a sneaky one, and you do want to be careful with this one because you don't want to commit any type of fraud. And that's where people call their credit card companies and they let them know, hey, I just lost my credit card. Can you guys send me a new one? Here's what ends up happening, and here's the madness behind this method, or the method behind the madness, rather. Where what ends up happening is that these credit card companies end up closing that account, but they end up closing that account in a positive standing. So let's say that you've had that card for 4 years, they close that positive account for 4 years, and then they send you out a new card, and then a new tray line with the 4-year mark gets opened up. So now you have one closed account with 4 years, and then a second account, which is now the active account, with 4 years, and that helps the age of your credit report. Now, full disclosure on that is that that may not necessarily work for all credit card companies. Again, some credit card companies are starting to catch up to some of these methods, kind of like MSing and things like that. But if this is something that you wanted to give a shot, again, this is something that I'd be very careful with, especially if you haven't lost your card. It's an approach that a lot of people are taking to raise the age of their credit limit. Now, the third method is a common one, especially amongst family members, and this is piggybacking, also known as having an authorized user. Now, with an authorized user, I actually like this approach a lot because it actually helps you bypass having to wait a significant amount of years for you to build up not only your credit utilization or the credit limit to help lower your credit utilization, but also raise the history of your credit age, because these are the three biggest factors when it comes to getting that FICO up to a 750. I think that this kills kind of like, instead of 2 birds with 1 stone, you're going to kill pretty much 3 birds with 1 stone with this approach. And that's when, let's say if you have a family member and they have a Barclays, or let's say that they have a Chase, you want to use it more with an A1, a tier 1 type of card, right? A grade A. They are going to add you as an authorized user. You don't need to use the card. You don't even need to have access to the card in order for you to reap the benefits of their payment history. And so a good rule of thumb here is you don't always just want to focus on the highest credit limit. So if I had to choose between a $10,000 credit limit, but the card is only 2 years old, or if someone were to add me as an authorized user and they have a $5,000 credit limit and that card is 10 years old, add me on the card that's 10 years old, because you could see, especially if you have a clean credit report, nothing's on it, all the collections are off, charge-offs are off, you only need to add some type of trade lines on there. Make sure that you're adding some more aged trade lines instead of the higher credit limits, because banks prefer to see that anyways. You could see, especially if you have that clean credit report, anywhere between an 80 to 120 point jump. And if you need any type of help cleaning your credit and doing it yourself, you can find the link to that down in the description, where we have some DIY products over on our website. You can start cleaning your credit and start seeing results in as early as 30 days. And by the way, another tip before you ask someone to add you as an authorized user, make sure that your credit report is clean, because if you have a bunch of stuff on your credit report and you try this method, you won't necessarily see a big bump, and it'll just be a waste of a trade line. So make sure that your file is completely clean before you add yourself as an authorized user to someone else's card. So moving on to the fourth method that people use to really get their credit going, which again, it's a method that hasn't been banned yet by the credit bureaus or by the card issuers. And that's going to be, like the authorized user, you have something called trade lines. You have age trade lines. You have high credit limit trade lines. You have batch trade lines. This is where you batch up different types of credit cards to your name. Now, the difference between this and possibly having someone add you as an authorized user is that more often than not, an authorized user is more commonly somebody that you know, right? That's a cousin, that's a relative, that's a friend, that's a sibling, that's a parent, somebody that you know. But with a trade line, this is as if you were to go on websites like Trade Line Supply and purchase some of these trade lines, where you can purchase, let's say, a batch of a Chase and a Barclays for a couple hundred or even a couple $1,000, depending on the grade of that trade line and what it's going to impact over on your side. This hasn't been banned, and so the difference between this is that you don't necessarily know this person. You're just buying these trade lines for a certain amount of time, for let's say 60 to 90 days. And in that window, what people end up doing is that they go out and they get their own primaries, because remember, authorized users, the third example that we gave, they can stay on indefinitely, especially if you know the person. But if you're buying trade lines online, you run the risk of those trade lines coming off, your credit score coming back down, or even worse, with things like My Jewelers Club or AG Jewelers, where they're not even reporting anymore. That $5,000 limit, they start coming down as well. They come off, so now your credit comes down. So in the time that you do have those trade lines, what people end up doing is they go out and they get their own primaries. So when those trade lines come off, they now have their own primaries with let's say credit unions, kind of like a Navy Federal, that are pretty much give some pretty good credit limits, especially for your credit being at a decent place, not necessarily at a 750 or 800, kind of like what you would need for an Amex. Now with this last method right here, don't ask me why it's not already included in the FICO scoring model, which I think it should be if you want my honest opinion. And that's going to be adding your rental payment history over to your credit profile and having it report to the credit bureau. And a company that you can use for that is going to be Rental Karma, where they go back as far as 2 years and they report that 2 year of on-time payment history over to your credit report. If you don't have any credit at all, but you've been making those on-time payments and you've been renting for a year, year and a half, even 2 years, then you could see literally go from a 0 to a 600 in less than 45 days. If maybe you have a clean credit, but you just don't have access to credit cards right now, this is a good way for you to add a decently aged trade line to your credit report. That's going to give you a bump anywhere between 40 to 60 points in less than 14 days. Again, why this isn't already included into the FICO scoring model is beyond me, especially for people that don't have access to credit cards, but they've been making their rent payments on time for the last couple of years. So there you have it. Those are 5 sneaky hacks that people are using to raise their credit scores without having to go the traditional route of just paying your bills on time, which, by the way, you still need to pay your bills on time, but this is kind of like that added spice to the recipe. If you found value in this content, consider hitting the subscribe button down below. All of the tools that we mentioned in this video, you can find the links to those down in the description. If you like what we have going on over on this channel, you'll love what we have going on over on the podcast, which is the Inside with Irv show. Anytime we're not posting on here, you can expect to see content over on that side as well. I appreciate you guys rocking with me. Until next time, everyone, I will see you in the next video.